Ever wonder about the shadowy origins of the Federal Reserve? Buckle up. We're about to dive into a tale of secrecy, power, and financial intrigue that shaped the very foundation of America's banking system. This is a story that takes us back to the early 20th century, a time when the world was on the brink of monumental change and a handful of men held the keys to the future of global finance. In 1910, under the cloak of darkness at a New Jersey railway, Senator Nelson Aldrich gathered 6 men who controlled a quarter of the world's wealth. These men were not just influential, they were the titans of industry and finance, wielding power that extended far beyond the borders of the United States. Their influence was felt in every corner of the globe, and their decisions had the potential to shape the course of history. Their destination? Jekyll Island. This secluded retreat off the coast of Georgia was the perfect place for a clandestine meeting. Far from the prying eyes of the public and the press, Jekyll Island offered the privacy and seclusion needed for such a momentous gathering. The island itself was a symbol of exclusivity, a playground for the rich and powerful, and it was here that the future of American banking would be decided. Their mission? To create a banking cartel free from competition and camouflaged as a US government agency. This was no small task. The goal was to establish a central bank that could control the nation's money supply and interest rates, effectively giving these men the power to influence the entire economy. But they needed to do it in a way that would not arouse suspicion or opposition from the public or the government. Among the guests were Paul Warburg of the Rothschild banking dynasty, a man whose family had a long history of banking and finance. The Rothschilds were one of the wealthiest and most influential families in the world, and Paul Warburg brought with him a wealth of knowledge and experience in central banking. His insights and expertise would prove invaluable in the creation of the Federal Reserve. Benjamin Strong of J.P. Morgan Banker Trust, another key player in the world of finance. Strong was a trusted associate of J.P. Morgan, one of the most powerful bankers in American history. His involvement in the meeting underscored the importance of the event and the high stakes involved. Strong's connections and influence would be crucial in garnering support for the new central bank, and Frank Vanderlip of National City Bank. Vanderlip was a prominent banker and a leading figure in the financial world. His presence at the meeting highlighted the broad coalition of interests that were coming together to support the creation of the Federal Reserve. Each of these men brought their own unique perspectives and expertise to the table, and together they formed a formidable team. These titans of finance weren't friends. They were rivals, each with their own interests and agendas. But they were united by a common enemy: competition. The banking landscape of the early 20th century was highly fragmented, with thousands of small banks operating across the country. This competition threatened the dominance of the major financial institutions based in New York, and the men at Jekyll Island were determined to change that. They were rivals, united by a common enemy: competition. At the time, the US was teeming with nearly 20,000 banks, many thriving in the South and West. These small banks were a thorn in the side of the big New York banks, which saw them as a threat to their control over the nation's financial system. The men at Jekyll Island knew that if they could centralize control and eliminate competition, they could secure their own positions of power and influence, many thriving in the South and West. These regions were experiencing rapid growth and development, and the local banks were playing a crucial role in financing that growth. But to the big banks in New York, this proliferation of small banks represented a loss of control and a challenge to their dominance. The meeting at Jekyll Island was a direct response to this perceived threat. These small banks threatened the dominance of New York's banking giants. The men at Jekyll Island knew that if they could centralize control and eliminate competition, they could secure their own positions of power and influence. They devised a plan to create a central bank that would have the authority to regulate the money supply and interest rates, effectively giving them control over the entire financial system. So this secretive crew devised a plan to centralize control, eliminate competition, and ensure their survival. They knew that they needed to create an institution that would appear to be a government agency, but would actually be controlled by private interests. This would allow them to operate with a level of autonomy and secrecy that would be impossible for a purely public institution. The key: detach money from gold and make it elastic. This was a revolutionary idea at the time. For centuries, money had been tied to gold, which limited the amount of currency that could be in circulation. By detaching money from gold, the new central bank would have the flexibility to print more money as needed, allowing it to respond to economic crises and manage the money supply more effectively. Print more money, control interest rates, and prevent catastrophic bank runs. The ability to print money and control interest rates would give the new central bank unprecedented power over the economy. It would be able to inject liquidity into the financial system during times of crisis, preventing bank runs and stabilizing the economy. This was a key part of the plan to centralize control and eliminate competition. Their solution, the Federal Reserve, a name designed to deceive, making it sound like a government entity. The name was carefully chosen to give the impression that the new central bank was a public institution, accountable to the government and the people. In reality, it would be controlled by private interests, giving the men at Jekyll Island the power they sought, without the scrutiny and oversight that would come with a purely public institution. By 1913, their plan was law. The Federal Reserve Act was passed and the new central bank was established. This was a momentous achievement for the men at Jekyll Island, who had succeeded in creating a powerful new institution that would shape the future of American banking. The Federal Reserve would go on to play a central role in the economy, influencing everything from interest rates to inflation to the availability of credit. The Federal Reserve Act was passed and the banking cartel was born. The creation of the Federal Reserve marked the beginning of a new era in American banking. The central bank would become a powerful force in the economy with the ability to influence monetary policy and regulate the financial system. The men at Jekyll Island had achieved their goal of centralizing control and eliminating competition, securing their own positions of power and influence in the process. Remember, folks, sometimes the biggest secrets are hidden in plain sight. Stay curious. The story of the Federal Reserve is a reminder of the power of secrecy and the influence of a small group of individuals on the course of history. It is a tale of ambition, intrigue, and the pursuit of power. And it serves as a cautionary tale about the dangers of unchecked influence and the importance of transparency and accountability in our financial system.